We're starting things off with a closer look of what looks to be we're in the midst of this sell-off across the precious metal space. And joining us now is the Global Head of Commodities Research at StanChart's, Suki Cooper, joining us from New York. Suki, good morning from the Asia Pacific. It must have been an extremely busy Tuesday for you, so thank you so much for taking the time. What do you think happened? Let's start simple. What do you think happened overnight?
There's a combination of factors here. From a technical standpoint, we can see that prices have been trading in overbought territory since the start of September. But equally, the rally that has been fast and furious. It's been quite a different momentum that we've seen over this last leg higher from around about 3,500 to when prices breached 4,000. It wasn't the same cadence of demand that we had seen previously, and the universe of investors in the gold space had expanded quite rapidly, and we were seeing a rapid accumulation in terms of ETP flows. So gold hadn't really had a chance to test that floor. And then coupled with that technical overbought territory, we were ahead of the Diwali-related buying as well, and that was impacting both gold and silver. Now Diwali took place on Monday. We're potentially likely to see a slowdown in some of that appetite as well. So it's likely a combination of factors, and coupled with that, we've also saw some positive rhetoric around US-China trade talks. So it's a combination of factors, but we think technical selling has been the main culprit behind the downward leg that we've seen.
Yeah, I really haven't seen moves like this ever, it seems, Suki. I'm just wondering, what are you looking at in terms of levels right now? What's considered a healthy sort of retreat or pullback here? And what's resistance, what's support?
That's a great way of looking at this sell-off. We are forecasting a quarterly average of $4,000 per ounce for the fourth quarter. We do expect gold to regain its upward momentum going into 2026, and we're expecting further highs next year. So we're expecting Q1 prices to average $4,200, but for the year as a whole, $4,488 per ounce. But in Q4, we think that currently we are seeing something of a healthy correction. We wouldn't be surprised if we see prices dipping below $4,000 per ounce. From a technical standpoint, I think that provides the best guidance in terms of what sorts of levels we could be looking at in the near term. And 3,900 is the next technical support. And then beyond that, we look at levels around about 3,700 in terms of where that support could come. I would say that normally in the gold space, we look to the physical market to set that downward support, but we haven't really had a chance to test that floor. The physical flows that we saw in terms of official sector demand, in terms of demand from China and India, haven't really been tested on the downside. So that will be crucial in terms of where that demand materializes. India's market typically would be still responsive if prices were high but stable. But if they're high and volatile, then we tend to see the market stepping away.